Good evening, guys. Welcome back to today's class. Uh, so here I just wanted to tell you that this Saturday and Sunday there is a mega marathon session for 3 hours. All right, it is like a non-stop session for RBI. All right, RBI Grade B exams. So you can the description for the same has been shared. The link has been shared in the description box below. All right, kindly check it out. So once again, I tell you this Saturday and Sunday make use of it. There is a full 3 hours, class. All right. It has even MCQs and all those things. All right. So it is for RBI Grade B 2023 exam. So quantitative aptitude. All right. So kindly make use of it. Right. So today we'll go to the class. Before itself, I'll tell you today the class will be for only half an hour or 45 minutes because I'm traveling today. So that's the reason I'll be winding up a little early. All right. Now we move on to the questions without any further delay. So the first question is this. So interest paid on delayed payment to the creditors for trade, then it will be shown under which activity? Now understand, usually if they give interest paid, all right, this question is from cash flow. So if they ask about interest paid, you obviously go for financing activity, right? You will be going for the financing activity. But here what happens, the interest is paid on what? You creditors, you have to, creditors means it is like your operational activities, right? Creditors means what? You purchase goods, or you deal with them in your regular course of action, right? So operational activity. So now you need to make payment. Say for example, I purchased say 100 kgs of something for my shop from Mr. X. Now I'm supposed to pay 1 lakh rupees within 30 days time. So the contract says that if I didn't pay 1 lakh within 30 days time, then it will attract say 1% interest. All right, 1% interest. So now what happens when I'm making the payment? I have to make the payment along with the interest, right? So now here the interest is because of what? Because of your purchase activity, correct? Ma'am, how do you know it is purchase? Because I gave the what? Creditor. Ma'am, creditor means even bank. No, it will come as a loans, unsecured loans or secured loans. All right, long-term liabilities, banks. All right, so that's a different scenario. Debentures. So in those cases, I will be going with financing. But here I use the word creditor, which mean I did this activity because of my every day in day out business activity. So which means it is an operational kind, right? So now there is an expense, there is an outflow of funds because it is happening because of what? Because I made a delayed payment. For which activity? For my operational activity. So now interest paid on delayed payment to the creditors for trade. And moreover, I have given very clearly here what? Trade. So trade means it's operational activity, right? Every day in, day out, right? So now the first thing you have to fix your mind is, as soon as you see these two words, it has to go to operating activity. Now is it an inflow or outflow? I have paid, it is an expense. So which means it's an outflow, right? So outflow under operational activity. You're getting it? Next. Dividend received rupees 100 and dividend paid rupees 100. Then again, this is a cash flow. It's simple. When you receive a dividend, it is from your investment activity. This one we have solved when we did the chapter itself, these kind of questions. Again, to reiterate, I have given this. So understand, when you receive the dividend, it is an income to you. So it is an inflow. Under which activity? Investing. You invested somewhere and because of that you are receiving dividend. So first one, inflow from investing activity. Next one, dividend paid. Why you pay dividend? Because you raised funds from the people. You raised funds from the investors. So you will be making payment of dividend to your investors, to your shareholders. So which activity it is? It is financing activity, right? So now it is an outflow because I paid. So if first one is inflow from investing, and second one is outflow from my financing activity. So the answer is B. So inflow under investing and outflow under financing activity. All right. Next one. EBT is 1 lakh, interest is 75,000, then interest coverage ratio. This question is from ratio analysis, and there is one for ratio called interest coverage ratio or debt service coverage ratio. All right. So what does it mean? So here we will check, okay, how much your earnings, how much you are earning. So first of all, understand this. Who will use this? Your lender. Okay, your creditor, your bank will check this. Ma'am, why they will check? When you go and ask for loan, I'll tell you a simple example. When you go and ask for a home loan, first thing what they will ask, your pay. What is your pay? What is your monthly take home? They don't talk about your gross. They'll talk about what would be your take home. Correct. So what is your take home? What is your previous loans you have? They'll ask. No, why they are asking? Why they are asking is whether will you be able to pay that EMI to them? Will you be able to pay the interest or principal amount on time if they give loan to you? Whether you have that capability. Correct. You have that earnings. That's the reason they are asking you all these things, right? Now everything is integrated. If they give you a PAN number, CRISIL score and CIBIL score if you have, and then now you can see there how much loan you have asked, how many times you have defaulted your credit card payments, do you have any credit cards, in how many banks you are holding accounts, every information they will get. Now everything is synced with PAN, right? So now there are other ways to check also, but main thing is they'll ask your pay slip. Give me your 6 months pay slip. And not only that, they'll ask you even your account statement. Why? Because they just wanted to ensure that you are getting that amount every month in your account, and you will be able to pay the EMIs, right? So that's the logic here. So there what they will use is this ratio they will use. You are getting it? So now what is it? What is the interpretation of this ratio? Whether your earning is sufficient to meet the interest payment, whether your earning can cover all your fixed interest payment items. So for that, to check that out, you will be using this ratio. So the formula for this ratio is earnings before interest and tax divided by interest expense. Okay, ma'am, why we are finding interest? Yes, guys, please understand. I have say 75,000 in my hand. Now my next, if I'm gonna take loan, I will be ending up paying say 30,000. So how do you do 75,000 minus 30,000? Would you check? No, you'll check. Okay, he has 75,000. So on that, if he need to pay 30,000, yes, he is in a safer zone. He can make the payment. That is what we will say, no? So the same way here, that's the reason we use the, term called EBIT. We don't consider interest, we don't deduct interest and taxes from our earnings to find out this, all right? So the formula is EBIT, that is earnings before interest and tax divided by interest expense. Now, in this question, they have given earnings before tax. EBT they have given. Okay, but I wanted EBIT, which means EBT means what? It is after interest, after deducting the interest expense. I have arrived at this. Guys, EBT is nothing but PBT, profit before tax. All right. So now after deducting the interest, my profit is 1 lakh. Now what is my profit before interest? I have to add back. No, correct. No, because I have deducted interest, then I arrived at the net profit before tax. Now they are asking, no, don't give effect for interest also. Just tell me your net profit before these stuffs. So now I have to add back that. Now if I add how much it is, 1,75,000 interest before earnings before interest and tax divided by 75k interest expense. Now my ratio is 2.33. Understood? right? This is a ratio analysis question. This helps you to understand whether the concerned party is able to cover his interest payments or not, whether he has sufficient earnings to cover his interest payment or not. That is the interpretation of this particular ratio. All right. Next one. Earnings after tax is 5 lakhs. Preference dividend declared is 75. Earnings per share for equity shareholders would be when equity shares are 20,000 in numbers. They are, again, this is like EPS they are asking. All right. It is again, I can say market ratio, market share, market ratio, I can say, which means the investors will use this ratio to analyze the performance of the company. All right. Now, EPS means how much that particular share is earning for the shareholders. That is called EPS, earnings per share. If I invest, something in this company, one share will earn me how much? That is the one share will earn me how much? That is the interpretation of this particular ratio. All right. So, the formula for this EPS is earnings available. All right, earnings available for the equity shareholders divided, because they are asking for equity. Guys, understand, whenever I talk about shareholders, first thing preference shareholders will get, second at last people would be equity. Okay, so everything, the earnings should be the earnings should be paid of everything. Sab kuch they should have paid. Whatever is remaining left over after meeting everything, after meeting interest payments, after meeting depreciation, after meeting all expenses, after meeting all taxes, after meeting even preference dividend, the leftover, now there is nothing to be paid. Whatever the leftover is there, that is for the company, that is for the shareholders, that is for the owners, that is equity shareholders. Then that amount, that only I have to consider to find out this. All right. So the formula for EPS is earnings available for the equity shareholder. So what does it mean, earnings available for the equity shareholder? Earnings after everything. All right, earnings after tax, after preference dividend, everything, whatever is available, divided by number of equity shares, number of equity shares. Now in this case, earnings after tax they have given, but they have a preference dividend, so that also I have to pay out of this. So I'll minus that. So now I have in my hand for my equity shareholder is 4,25,000. This 4,25,000 is free of everything because I paid after, because see here it is after tax. EAT means earnings after tax. I have made my tax payment, I have made my interest payment, I have made my all the expenses, I have even paid my dividend, preference dividend. Now the leftover amount is 4,25,000. So this one will be divided among how many number of shares? 20,000 shares. If I do that, then earnings per share would be 21.25 paise. All right, 21 rupees 25 paise would be the earnings per share. Again, this is one of the question from ratio analysis. All right. Next one. As per SEBI guidelines, bonus shares cannot be issued out of. Guys, this is a theoretical question. It comes in your bonus issue. You cannot issue out of revaluation reserve. You're getting it? It cannot be issued because revaluation reserve is a notional gain. So you cannot use that to issue your bonus shares. This is SEBI guidelines. So this is a provision you have to memorize. As per SEBI guidelines, a bonus shares cannot be issued out of revaluation reserve. All right. Next one. Issue of a share at a price less than the market price to the existing shareholder. Guys, existing shareholder, if you are issuing at a price means then that is called right shares. The definition of the definition of the right share itself is called invitation to the existing shareholders. See, first of all, I am going to raise funds. Okay, I am in need of funds as a company. Now, instead of going out and asking, already I'm listed, I have around some 10,000 shareholders. Now, instead of going out and ask, first let me ask them only, because they know me very well. They are my shareholders for such a long time. If I go and ask them, if they are ready to buy, let them buy. So for me, the cost of shares will be reduced, because see, when I go for public issue, lot of expenses are there. I have to issue, first prepare the prospectus itself is the biggest thing, and then application, the collection, so many things are there, so many cumbersome procedures. But when I go with the existing shareholders, they know the company, they already know, they already invested. So it makes my compliance is little easier when it compared to an open market. And then the cost also, it will be lesser when it compared to the open market. You're getting it? So now that's the reason companies will go for, first thing they'll ask, do you want to buy my shares? Please buy. If you want, I can give it at this price. Please buy. You're getting it? So rights share. For that, the name is called rights issue or rights share. All right. Next one. The fair value as on grant date. This one is under your ESOP. All right. The fair value as on grant date is 15. Fair value as on exercise date is 10. Expense will be booked at. Again, this is the provision. ESOP. I already told you in the class also. Remember, your grant date ka valuation is important. Exercise date ka valuation is not required. You're getting it? The expense will be apportioned. The expense will be booked during the vesting period. Over a vesting period would be the the fair value as on the grant date, not as on the exercise date. So the answer here is 15 rupees. You're getting it? Remember, you have to look at the grant date ka value always. You're getting it? Next. Issue of 15% debentures which are redeemable after 15 years will be shown under. Guys, understand. This is a question from your framework. When a debenture is redeemable after 15 years, it's a non-current liability. Because it's my loan, I have to repay. I am just borrowing money from the people. So for that, I'm issuing an instrument called debentures. So any instrument which is more than 12 months, it will be treated as non-current liability. This is the question from your framework. So this is as per schedule 3. It will be treated as non-current liability. You're getting it? Next question. This is for your depreciation question. All right. AS10 PPE. Right. Now, the cost of the asset is rupees 2 lakh. They have given cost of the asset. It is purchased on 1/10/2019. Life of the asset is 10 years. All right. Life of the asset is 10 years. Depreciation for 1920 would be, it is SLM. SLM in straight line method. So what is the depreciation formula? First, we need to know that. What is the depreciation formula? We need to know the depreciable value, then divided by life of the asset. Because since it is an SLM, so I have to do, this is the one. So what is meant by depreciable value? We know this, I have explained even in the class. So depreciable value is nothing but cost minus residual value. Cost minus residual value. You are getting it? Now, please remember here. Now, cost of the asset is 2 lakh. Now, ma'am, they didn't give residual value here. How do I find out? Shall I put 0? No. Remember, as per Schedule 3 Companies Act, they have told depreciation is dealt by Schedule 2. All right. So, as per Schedule 2 Companies Act, they have told 5% you should take it as a residual, minimum residual value. You cannot depreciate 5%, any asset for that matter. So 5% except intangible, 5% you have to consider as a minimum residual value. So now what happens? 5% of 2 lakh is how much? 10,000. So now 2 lakh minus 10,000 is what? 1,90,000. So this is my depreciable value. So 1,90,000 divided by how much is the life of the asset? 10 years. So per year it is 19,000 I'm supposed to charge. Every year I have to charge 19,000. Guys, remember the question is, what is the depreciation for 1920? Remember, my financial year ends on 31st March 2020. When the asset was purchased, guys, October, 1st October 2019. So it starts on 1st October, ends on 31st March. So now tell me, do you have 12 months here, 1 year? No, you have only 6 months. Ma'am, then but it is every year. Huh? So after 10th year, it will end only from April to October. You are getting it. Life of the asset is 10 years, I understand. But this financial year, the life is only for 6 months now, right? So the period, the duration of the asset for this particular financial year is only 6 months. So now per annum, it is 19,000. For 6 months, how much it is? It is 9,500. So the answer is 9,500. So what I did, first I have to find out the depreciable value. So what is the formula for depreciable value? Cost minus residual value. Ma'am, here the question, residual value they didn't give. Remember, as per Schedule 2 Depreciation of the Companies Act, 5% minimum should be your residual value. So 5% of the cost. So 2 lakh minus 5% of 2 lakh, 10,000. So now my depreciable value is 1.9 lakh. That is 1,90,000. That will be depreciated over a year of 10. So now per year it would be 19,000. For this particular financial year, the duration is only 6 months. Hence it is 50% of it, 9,500. Hope you are getting it, guys. You are understanding the question. I think this question we have solved last class also. All right. This question, yeah, this question is not there. I think this question is repeated. Last class we have done. Next question. This is from your AS10 again. PPE. Bearer plants are. This is as per the definition question. The answer is mango tree. How I say mango tree? Bearer plants are what? It is a crop or it is a plant whose produce you can sell, and that plant will still continue, which means the plant itself is not a produce. Say for example, paddy, wheat, these things are the plant itself as a produce. No, so those plants are not bearer plants. Bearer plants are something which can give, which can give the agricultural produce, or which can give this what I can say, this production for more than a year. So say for example, coconut tree, mango tree. So all these things, it's not that one time it will do and next year it won't be. No. It is not like that. They will take time to grow, and once they started yielding fruits, then fruits or whatever it is. So once they started yielding the produce, it will be, it will be there for some years, maybe for 50, 60 years. Then my mango tree also sometimes at the end, it is a scrap only, you are cutting it down. You are not selling mango tree as a product. You are not selling mango tree as a product. Your product is not a mango tree. Your product is mango. The tree will be sold only when it becomes very old, when it cannot bear any produce, then only you will scrap it, right? So your coconut tree is another example. So bearer plants are something which gives you produce, all right, and for more than one period, and it will not be sold as an agricultural produce by itself. That is called bearer plant. All right, here the answer is mango tree. All right, I hope you guys are getting it. With this, I'll wind up today's session. Once again, I'm telling you, you have a mega marathon session on this Saturday and Sunday for RBI, exams. You have quantitative aptitude. Make use of it. All right. The link is given in the description. So kindly go and check it out. I wish you all the best.